Let's focus in on the fixed income space. Now we've got Mr. Ashutosh Khajuria, President Treasury at Federal Bank, who joins in on the show. Mr. Khajuria, thanks very much for joining in. If you could just give us a prognosis as to where you see the yield on the 10-year bond heading and what you're penciling in over the next 6 months.
Well, 10-year yield is right now at around 8.16, 8.17 levels, and I think this is because of the expectation of repo rate cut. I think in January policy, it appeared as if, though the language was dovish, it appeared as if RBI is not looking at cutting the repo rate before 31st March, and maybe a call on it would be taken in April annual policy statement and all. But it appears, after this IIP numbers have come, and also looking into the inflation scene, wherein the core inflation has improved considerably, somewhere around 1%, 100 basis points or so. And I think RBI is now quite close to, what they had projected inflation to be towards the year end is likely to come true, and we may see year-end inflation numbers to be somewhere around 7%. And even in revision and all, we are not seeing much of, off-the-mark numbers. This time, I think revision was by about 35 basis points or so. In such a scenario, when you have very poor growth numbers, 1.8% as against, these are December numbers, as against November numbers of somewhere around 5.9% or so. I think it appears there could be a repo rate cut even before April policy. It may happen in the March mid-quarter review.
Khajuria, on
as far as
would you then be
expecting
sorry, go ahead.
Please.
No, my question to you was, on that basis, so you just mentioned that you could possibly see a cut on the repo rate on the 15th of March. Are you also expecting further action on the CRR as well from the RBI?
Yeah, that also is expected. If you recollect, in the month of January when we were discussing, I was quite, firm on this thing that I was expecting CRR cut of 50 basis points. That happened in January. But still liquidity position is quite tight, and we are seeing repo borrowings of the banking system from Reserve Bank of India in excess of 1.5 trillion rupees consistently. For last 3 days we are seeing it above 1.6 trillion rupees. If that be the case, the way through which liquidity can be injected is, the easiest, or rather the crudest tool would be CRR cut. With OMOs and all, I once again repeat that there would not be much of a relief on the liquidity front. Because once CRR is cut, straight away you get every 1 percentage point you have 64,000 crores getting released in the system. So I still feel that maybe in this March review, we may have another 50 basis points cut in CRR.
All right, Mr. Khajuria, just deviating a little from our focus on the money markets, currency with the public in the fortnight ended January 13th actually rose by a huge amount, by 22,000 crores. Now everyone's putting this down to the fact that state election campaigning was on across the country, at least in a few states. Now, would you say that as the election monitoring process gets tighter as we go along, this trend of currency with the public increasing during election time is going to come off sharply? And have you been witnessing that in past seasons?
See, it would not, it happens, in past seasons, yes, it is witnessed. And as far as, festive season is concerned, that also is going to be over. So gradually you would see, because there are two reasons where you see increase in currency circulation, increase in currency held by public. Now, one is because of the festival season, people carry more of the currency. And second is, of course, the elections and all, where, lots of spending is done on cash basis. Now, state election process being over in first week of March, we expect, post 10th March or so, we would gradually see currency coming back to banking system, and therein, the liquidity tightness may improve on account of that also.